Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday. On Friday I woke up and I absolutely intended on making a video, and I sat down and I probably spent around 45 minutes writing a video for Friday. And then I got to the point where I didn't love the topic that much, so I decided to scrap the video. And so I kind of waited over the weekend for some inspiration to come. And in today's video, I'm really excited to talk about 3 reasons why I'm kind of worried that the stock market might crash again. Obviously, there is a huge amount of uncertainty coming from the whole second wave of a virus, but I'm not going to be talking about that today. I'm going to be talking about some of the concrete things that we know will absolutely happen. The virus is a lot of uncertainty, and we don't really know what the overall damage or what the possibility of a second wave is going to be. But the 3 things that I'm going to be talking about in today's video are things that we know for certain are going to happen, and I think it's going to have a huge impact on the stock market going forward. So as the market has recovered from its bottoms on March 23rd, we've seen a rapid recovery, and that makes me pretty worried. So I spent this past weekend looking at some of the factors going forward that I'm going to be watching for a potential stock market crash. So I've already made a video talking about why I was worried about the stock market, and some of the main things that I was watching was the fact that we've recovered so quickly from the bottom that we saw on March 23rd, and we've had this V-shaped recovery, which is one of these buzzwords that keeps getting thrown out a lot. And so at this point, the stock market seems to just be kind of chugging along. It's pretty flat on the day, but we've seen some ridiculous recoveries in the past, even though a lot of the problems that we've had have not been fully resolved. Before we get started, I do have to say that I'm not a financial advisor, and this is not financial advice. I'm just a 23-year-old giving my own opinion on the stock market from the comfort of my own room. Also, if you've been enjoying these videos, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Almost 90% of the people watching these videos are not subscribed, so go ahead and hit that button right now and join the channel. Also, if there's a topic you'd like me to go over in a future episode, I really appreciate it if you leave it in the comment section down below. All right, now that we've gotten that out of the way, let's dive right into it and start talking about the 3 main reasons why I'm worried that there's going to be a potential stock market crash part 2. So the first and probably the main factor that I'm going to be watching going forward has to do with the CARES Act. If you remember, the CARES Act was the $2 trillion bipartisan bill that went through towards the end of March that gave a lot of money to individuals and bailouts for a lot of the companies, specifically the airline industry. And so $350 billion of that money went to the Paycheck Protection Program, which is the PPP if you see that thrown around anywhere else. This was to make sure that small businesses tried to keep as many employees on from February until the end of June. And so that was a huge thing to try to incentivize businesses to not lay off employees rapidly. And that was a way to try to protect the economy. And we've already seen a record amount of unemployment, but I'm assuming that this payment protection also aided in that in some way. And so this is also where the $1,200 checks came from that were given to individuals of the lower and middle class, and that ended up being around $300 billion of the $2 trillion that was spent. But the big one that I'm looking at is the fact that unemployment benefits were boosted and were actually given an extra 13 weeks. Another huge thing is that they allowed for the first time ever for self-employed contractors and gig economy workers to file for unemployment. And this gave a lot of people some of the protections that they needed to be able to stay inside and not be forced to go work outside of their homes to try to make a living for their family. So there was an extra boost. I believe it was an extra $600 a week given for unemployment to try to incentivize people to stay inside. And so people that were very dependent on their jobs in the past might have been making more than they were in the past, but we're starting to see the end of that. As of right now, that unemployment protection is going to be ending around July 31st. And so there is a set in stone date that I'm going to be watching where there's going to be a lot of changes in the way that the economy is set up. Currently, there's a lot of people that are using this unemployment to protect themselves and their family because they can afford to stay home right now. However, when this bonus unemployment starts to wear out at the end of July, it's going to be really interesting because it's going to force a lot of people that didn't need to work since the pandemic first hit, and they're going to be forced to go out of their homes and be able to provide for themselves. And so what this means is that there's going to be a huge increase in the demand for jobs. Yes, we've had a large jump in unemployment claims, but a lot of these people, based off of the overall pandemic, have not wanted to work outside the home right now. But once this extra protection kind of goes away, there's going to be a huge boost in the amount of people searching for jobs, and I'm not sure the economy is fully ready for that. At this point, there's still a lot of places around the country that are still on some level of lockdown, and a lot of the jobs that were present at the beginning of this year are still waiting to be reopened. We're already seeing normal Americans struggle to pay for rent, their mortgages, and their car payments. By the end of May, I saw a report saying that around 3.6 million homeowners were unable to pay for their mortgage payments. And so that resulted in a national delinquency rate of around 6.5%, which is the largest we've ever seen, even back to the financial crisis of 2007 and 2009. But a lot of those people that were unable to pay their mortgages were protected by the CARES Act and their forbearance programs that were implemented into that act. And so now that I've kind of outlined everything that the CARES Act did, why is this going to be a huge impact on the stock market overall? And what I'm watching is that a lot of people that could afford to stay home based off of the extra benefits that were given from this CARES Act are no longer going to be able to do that. And so what this means is that there's going to be a huge spike in demand for jobs, and I don't think the economy and kind of the state of everything that's going on is ready for that right now. This could result in an additional jump in virus cases around the country, or it could also just result in people being unable to find work, and we have a lot of people that are going to be unable to pay their bills. And so when you have this money that's being removed from the economy, when you have an extra $600 a week going towards households, that is a huge boost for a lot of people. And when that gets taken away, there's going to be a huge trickle-down effect. It's not only going to affect these families that desperately need this money, it's also going to be affecting these small businesses and the large businesses that are no longer going to be having these transactions with these individuals. And so this is going to be something I'm going to watch going forward. And so while we saw a record amount of recovery from the retail sector, which is what boosted the stock market up last week, I'm expecting we're going to see kind of a contraction in that spending in the upcoming months, especially as this CARES Act starts to wear off. And so far, the CARES Act was pretty successful in kind of recovering the economy to a decent extent, and the stock market has really enjoyed that. However, now that this is starting to wear off, it'll be very interesting to see how the stock market reacts to this going forward. This is my first factor why I think the stock market might crash, and I'm very curious to see what you guys have to say about it in the comment section down below. All right, and the second factor for why I think the stock market might crash a second time is the fact that most of these companies do not have guidance for their earnings in the next 2 quarters. Since the whole pandemic thing has started, most of my videos have talked about earnings reports, and then I've followed up every sentence with, and they cut their guidance for the rest of 2020. What this means is that Wall Street overall is kind of flying blind. Guidance is something that most companies do. It's not required, but it's kind of expected at this point. And it's an expectation from the company of what they think their earnings and their revenue is going to look like for the upcoming quarters. And what this does is it gives estimates for Wall Street, and it gives a way to kind of compare how the company does overall when they actually release those earnings. And so that's how you get these earnings beats or misses, and it kind of dictates how the stock is going to move after the earnings report comes out. And now at this point, many of these companies have cut their guidance, meaning that Wall Street is kind of blind going forward. What this means is that there's going to be a huge disconnect between these companies and investors overall. And while a company might release earnings that they feel pretty good about, Wall Street might not feel the same way, and releasing guidance is kind of a way to pull the two sides together. I have been reading some reports talking about Warren Buffett specifically wanting to get rid of guidance as being kind of the norm on Wall Street. He says that it kind of incentivizes companies to focus on short-term returns and not really focus on the long term. And I'm actually going to go back to that topic for the third reason why I think the stock market might fall further. And so in the past, when companies have cut guidance, it's usually seen as a negative thing if the overall market is going pretty well. However, when the overall market is having a tough time during the pandemic, and most of these major companies have cut guidance, I'm expecting some very volatile moves when earnings reports are actually released. Even when companies announce that they're cutting their guidance, you have some relatively large moves based off of that. You had Delta, which cut their guidance probably around March, and as a result, the stock fell significantly. And while this isn't normal and there's other news events going on at the same time, it shows that when a company cut their guidance, it usually does not look like a great thing for them overall. And so now that we have some of these major companies cutting their guidance, I'm very curious to see how the market is going to react to it overall. I'm expecting that if we have a major company, something like maybe a Microsoft or an Apple, and the stock market kind of expects them to do better than their earnings actually show, I'm expecting the market to react pretty violently to that overall. The major companies, these tech companies that have been boosting the NASDAQ for the past couple months, if you have some significant misses for their earnings because investors are flying blind and they don't really know what to expect, I'm kind of expecting the market to react pretty violently to the downside to that. I saw a story from 2012 where Google did not have any guidance for their upcoming quarters, and it resulted in a massive disconnect between the expectations of investors and the company itself. And so when they announced earnings, it was nowhere near where the stock market expected them to be. And there wasn't a lot of communication between the two sides to kind of bring them together to a consensus estimate. And as a result, the stock fell 8% overall. And this is a massive company of Google. And so I'm expecting we're going to see some examples of that going forward. While it might not be an overall catalyst to push the market further, if we're starting to get some negative sentiment coming from the overall market, a couple major companies having major misses on their earnings report could be a reason why the stock market goes farther down. And so this is going to be the second factor that I'm going to be watching going forward as a potential reason for a stock market crash part 2. All right, and the third and final reason for why I'm expecting there to be A stock market crash part 2 is the fact that we're seeing significantly less in the stock buybacks and dividends. This was a video that I made a while ago talking about why the airline industry has put the overall stock market in such a poor spot. And if you missed that video, I'll throw it up there right now. If you didn't know, stock buybacks are where a company uses their free cash flow and buys up their own shares of the company to kind of remove them from circulation. And so if you're removing the overall number of shares that are present on the market, it's going to increase the value of the individual shares because there's going to be less of them overall with the same valuation for the company. And so this is usually seen as a positive as companies buy back their shares, and it's kind of a way to give back to the investor and artificially increase the stock price. And while this seems fantastic on paper, we've seen some major problems with this in the past. The main sector that's had problems with this is the airline industry. In the past decade, all of the airlines have made around $49 billion in free cash flow, and $47.3 billion of it has gone to stock buybacks. And what this meant is that many of these companies did not have enough money to survive. And as the pandemic started, these airlines became very vocal on the fact that they were going to need assistance from the federal government to survive. And that is where the CARES Act kind of came in and boosted up these airline stocks and why they have recovered significantly since their lows. And so I'm expecting to see a significant change in the way the overall market kind of moves based off of the less reliance on stock buybacks. From that video, I talked about the 3 places that a company can put free cash flow. You can do it with stock buybacks and dividends. You can put it into research and development, also called R&D, or you can just hold on to it and kind of save it in cash. Some of these major companies, which I talked about in that video, stuff like Apple and Microsoft, which had a significant stockpile of cash. So it made it so that when the pandemic hit, they weren't very vulnerable. However, some of these companies, the airlines, Boeing, places like that, did not have a lot of cash on hand. And so at this point, it's going to be very interesting to see how the market reacts without this influx of cash from these stock buybacks. In the past decade, for the S&P 500, 52% of all free cash flow went to stock buybacks and 39% went to stock dividends. So a majority of this free cash flow is not going towards research and development or protecting the company, it's going back to the shareholder, which is great for us, but it's made a lot of these companies very vulnerable. In the past year, we've seen $2 trillion in money spent from companies on stock buybacks, which is massive. And it's crazy to think about because it's actually the largest source of demand for stocks on the overall market. And if we're seeing a significant decrease in the amount of stock buybacks, it'll be very interesting to see what type of impact it has on the overall stock market. My guess is there's not going to be as many shares traded, and as a result, any significant move may be from the CARES Act wearing off, or from the fact that guidance has been cut and many people don't really know what to expect with these earnings reports going forward. I kind of expect the stock market to react pretty violently to overall moves. It'll be very interesting to see what becomes the norm with these stock buybacks because they've been very public in some of the discussions that a lot of politicians from both sides, surprisingly, have had about stock buybacks. So going forward, this is going to be the 3rd reason why I'm very curious to see if we're going to have a stock market crash part 2 because stock buybacks, as I mentioned, were the largest source of demand for stocks on the overall market. And if that gets diminished over time and maybe becomes banned or heavily regulated, it might have significant impacts on the stock market going forward. So overall, those are my 3 reasons for why I think that we might see a stock market crash part 2. We have problems with the CARES Act running out for unemployment towards the end of July. We have problems that many of these major companies have cut their guidance, so a lot of these investors are going blind for these earnings reports. And as a result, I'm expecting to see some very volatile moves when it comes to earnings reports going forward. And then the 3rd and final is the fact that stock buybacks and dividends are not going to be as common as they were in the past. And now stock buybacks are the largest source of funding to the overall stock market. It'll be very interesting to see how that changes things overall. Overall, I don't think any one of these factors is going to push the market lower, and the thing I'm watching overall is the overall virus. But some of these factors are going to make the stock market more vulnerable in my opinion, and I'm going to be very curious to see what happens in the future. Right now, most of my accounts are sitting pretty heavily in cash. I've made a lot of money, around 30% in the past month and a half, and I'm pretty satisfied with that. And I feel very concerned about the overall market right now. So I'm going to be sitting on the sidelines, looking for some future plays, and hopefully I don't miss out on too much gains. Thanks for watching this video. Really appreciate the support on the channel, and I'll see you on Wednesday.